right, good morning, guys. Sorry, I was trying to get YouTube set up correctly. It was weird. I couldn't find the stream software. I was like, I know I'm streaming. I can see it. All right, let me start the giveaway real quick. Who won last time? Debbie? All right, so Debbie was the winner last time. Let's go ahead and get this started. There you go. You guys should see it. There we go. It's popping up. All right, for those of you guys that tried to enter, you can go ahead and enter now. Sorry, running a little bit behind today, Monday morning. Obviously, the voice is not fully there, so we'll see if I'm able to do the entire chart school or not. Obviously, lacrosse tournaments are always rough on the voice. They just, yeah. I don't know if the kids don't hear you sometimes, or they selectively choose not to listen, but when you're yelling and into the wind, and yeah, it starts to go. Anyway, tournament was better. I know a couple of you guys have asked. They did better. They tied a game that we should not have tied, and we lost the game by 1 point. The last one of the day, it was like 98 degrees outside. The kids got tired. They kind of quit on us with like 5-6 minutes to go, and the other team went up just with like 2 minutes to go. And they it's weird. We typically play 20-minute halves. They decided that they were going to get rid of. It kind of makes no sense. So it's 98 degrees outside. They decided that they were going to get rid of timeouts and just add 2 minutes to each quarter. And it's like, what? Why? Like, it's 98 degrees. If anything, if you're going to get rid of timeouts, then shorten it so the kids aren't running. But they did. I don't know. And the other team scored on us with like 2 minutes to go. We were actually up 2-0 to start off the game. Went down the field, and a couple kids just decided that they didn't want to play, that they wanted to quit. So, yeah. So needless to say, voice is a bit kind of raspy. I'm going for my James Earl Jones voiceover, training today. No, just kidding. Anyway, markets have been quite interesting in the last 24 hours. The euro is absolutely just going crazy. And it's actually not so much the euro. It's more the dollar than anything else. You can see pretty much any of the dollar-based pairs. It's just getting hammered right now. Now, a lot of that has to do with the stimulus this week, but a lot of it also has to do with kind of the barbs that have been going back and forth. We mentioned it last week, and again, dollar Swiss is technically up right now, but I think it's because everybody's expecting it to drop. Plus, it was getting really, really low on the curve, so kind of in a weird position because the technicals are going to step in. But if you're looking down into the hot news, you can see that the U.S. consulate in Chengdu officially closed and taking control of premises. And again, China needs to expand nuclear arsenal as U.S. presses closer. A lot of barbs going back and forth. So, there is dollar weakness. It's just so overly negative. Again, that's a Swiss, but you can see euro dollar up almost 100 in 24 hours, 85 on the pound dollar. Dollar yen down 70. Again, that's a big one for Monday morning. Dollar CAD, neither market's open, and it's already moved 36, and you can see there's been a bit of a retrace in the last hour. So this one was actually a bit worse when I first started setting things up. And then Aussie dollar, again, only up 54. Obviously gold spike because everybody knows the stimulus is coming. Yeah, we'll see. That one's going to keep going. We don't even know what the details look like yet. Once it's approved, we'll see this one. Yeah, it could be interesting. And then euro pound up 25. So again, really not much movement there. So it's not like this euro strength is just gigantic euro strength, right? And then pound yen is more or less flat. So a lot of stuff going on. There was some interesting headlines earlier talking about the German economy shrinks massively in the second quarter. And then the German economic outlook is brighter for third month post shutdown. But it's like, yeah, it looks great. But man, it was a massive shrinkage, right? So yeah, we'll see. And then the German data, you guys can see down here, estimated. So it did a little bit better. So it's a good week, a good start for the euro at least. Whenever anything good happens in Germany, it will. I mean, again, they're the driving force of the euro. It will make it move. So yeah, well, it's selective. I know that it is. Because you're like, well, I want to do this. Yeah, they're 10, but yeah, it's pretty selective on their field. But so 8:30 today, guys, we have core durable good orders. Again, with all the dollar weakness overnight, this could actually give us a boost if it's a little bit better than expected. Both of them are not quite as high as they were before, but they're not negative numbers. Okay. So again, that's kind of it's expected to still be a positive number. So, I mean, if it comes in above that, that's even more. That's kind of what we're looking for. If it comes in at, say, like 3 and 5, for core and regular durable, it's still positive, but it will kind of give like a little bit of a blunting effect to it. If they're negative numbers, that means that we're again shrink again. And yeah, that will definitely set the market in a tizzy this morning to the downside. Because again, it's the only news we have besides tweets and things like that. And again, Monday is always kind of a reactionary over what's happening over the weekend. So, um, that first hour, when retail traders are able to kind of put all their positions in from things that they heard, can get a little nuts, right? But again, this core durable goods will give us either a boost or a bit of a buffer this morning. So we'll see how these two come out. And again, both of them were positive last time. You can only assume that they will be positive again. Next time that this comes in, when it's month over month, may not be as high, right? Because again, things are shutting down. And actually, I saw it. I guess I didn't see it here. I saw it on YouTube, I guess. On YouTube, health officials are saying that we should do another shutdown again, which is kind of interesting. I don't know. It's interesting that the health officials want everybody to shut down, but I don't know if you guys saw this over the weekend, that the CDC now is also on board with sending kids back, as well as the American Pediatrician Association, the APA, I guess, are both fully on board for sending kids back full speed. For some very interesting reasons. And again, like them or dislike them, the president is one of the kids that go back, and everyone's like, he's an idiot, he doesn't know anything. But I mean, the CDC and the American Pediatric Association, they're not like big fans of Trump, and they both support it because of mental health reasons and the fact that children have such a low risk, and as well as spreading, which you would think would be the exact opposite, but they both come out and said that now. So I'm interested to see if that kind of sways anything this week. But I did read that news late Friday or Saturday or something. That both boards now are fully on board, but yet everybody's going virtual again. So I don't know. It's going to be interesting to see going forward. It's kind of like it's an interesting situation because you have those proponents, there's people that disagree and like, listen, he doesn't believe, the president and people don't believe in science, but yet now that science is saying that they need to go back, it's still like, oh, you're idiots. It's like, I don't know. Is it science? Is it not science? Because the two boards that are considered the end authority are telling you what to do, and you're not doing it. So, yeah. I have an echo? Oh, I know why. Hold on. There we go. There should be no more echo. I hit the one, but not the other one. Thank you. All right. So, as far as today, again, that's all we got. Tomorrow morning, there is some early morning news, and it's nothing big. Spanish unemployment rate is not really, I wouldn't say that the Spanish unemployment rate is really going to change things around too much. It's expected to go up a little bit, not too surprising with everything going on. But again, remember, Spain is part of that, the four? I guess there's actually more than four, but, part of the pigs, Portugal, Italy, Greece, and Spain. They are kind of one of the chinks in the armor of the euro, for lack of a better word. So again, I expect them not to be great. And again, Italy and Greece already kind of got to speak their grievances at the EU Economic Summit. Again, Spanish unemployment is kind of right there as well. And then consumer confidence, but that'll be after chart school. So for the most part, guys, nothing really else today. Even if I click on the yellow, you can see, basically we are done. Even at the lowest impact, the only thing we have tonight is this SPPI, year over year, which obviously is not going to be great, but it's still, expected to be about the same. So, nothing today, which means news and latest stories is going to take over. Okay, this is going to be the big thing. I love this. Watch out, inflation could be lurking on the other side of the pandemic. Well, yeah, probably. You produce money, that's what happens. Yeah. And again, this is the two of these are linked together. So it's funny. And I do believe a lot of this is, again, we know nothing. Gold is definitely a market of speculation. Oops, that's not what I want to do. Here, apply filter. There we go. Is the echo gone, Ernest? It should be. I have two buttons. One is like system sound and one is microphone. And I will get an echo if I don't click the system sound off, which I just did. Anyway, let's go over and look at charts. Let me pull this out of the way. Let me put this here. All right, charts. Yeah, that's what happens. So if you guys can't hear me, typically what happens is if there's an echo, both buttons are on, right? If you hear like you can barely hear me, that means that I don't have the microphone on, but the system sound is on. So it's pulling from like a webcam or one of the other things. So, yeah, no, he was right, Will. It should be fixed now, though. Oh, voice is dying on me. All right, so Aussie dollar, first one. So obviously we expect the Aussie dollar to continue to rise. Would I say that Aussie dollar, I mean, look at it right now. Is it at all-time highs? No. I mean, is it high on the curve? Yes, right? Is it high on the curve? But is it at the peak? The answer is no. And this is why I think it's kind of interesting to be talking about gold and how high it's going to get and everything like that. Eventually, the spectators will over-speculate, right? Eventually, the market will not justify the price anymore, and it becomes a bubble. Okay. Now, will stimulus, will printing money also increase that? Sure. But when it's not backed up by something on like kind of a fundamental basis with something like the Aussie, I mean, the Aussie is the number one producer of gold. Eventually, it will catch up, and I think gold will come back down again as well. So, this guy had an interesting pullback. We'd marked off this zone. We did on the hourly. We talked about this big burst up, and again, it pushed down, and it has reversed, obviously, today. You guys can see that between here and here, this is where Sunday night happened. And we had to pull up into the zone, and then it dropped back down again, and it grabbed some more orders. And we had a nice rally. Now, we're kind of not quite at the peak. It kind of got turned around in an area that's not really easily identifiable. And then we had a push down to retest, another push down again in an area of consolidation and kind of push back up. So, right now, from the open to where we are right now, there's no U.S. dollar traders online, right? This is all kind of the early speculation, futures traders, which again is the most speculative market there is. It's not really based off of anything besides speculation. You're betting on what things are going to be in the future, is what it is. That's why it's called the futures market. So it will be interesting to see when U.S. traders come online in the next about 45 minutes to see what they're going to, if they're going to continue keeping the dollar weak. Now, is the dollar weak bad? The answer is no. Okay, a lot of people believe in, Larry Kudlow used to be all about king dollar and strong dollar. But understand, people look at this and this is bad. Oh, gold's going up. Well, great. Gold is a hedge for inflation. It's a hedge. It's not a way to make money off inflation. And if you actually look into kind of gold studies, the value of gold hasn't changed in 30 years. Okay, inflation has changed, but what you buy now is the same as what you could buy before, and that's why it's different. It really hasn't been an asset that is producing new things, right? It's not giving you like an 18% return. It's staying with inflation because it is a hedge for inflation. So with all this movement, again, if we don't see the inflation rise, there is nothing to substantiate gold prices being this high. With interest rates staying low, are we going to see the inflation? That's the big question. Now, the Aussie is already having issues. And again, gold is not only an inflation play, but is also an industrial play. And again, some of that data comes in from China. With kind of having an issue here, again, we may see this turn and flip because I'll tell you right now, other countries do not want weak dollars. And here's why. If you have a U.S. weak dollar, okay, it is easier for our companies in the United States to export to other nations, which steals from Japan, China, and anybody with an interest rate lower than ours. Okay? A lot of export-based economies. We are not an export-based economy. So us keeping the dollar very, very cheap is very, very good for U.S. companies because we will export the heck out of things. If the dollar stays cheap, guess what? That will also affect oil. If we can produce oil and sell it in U.S. dollars cheaply overseas, people will want to buy it from us, right? So again, it puts us into a lot of markets we're not currently in. Natural resources, natural gas, steel. All these things that we're talking about doing tariffs on, the cheaper the dollar is, right? It actually becomes, it makes U.S. companies want to buy less from other countries and more from here because it will be more expensive to purchase things overseas. So it's almost kind of a natural way of having tariffs. A lot of people haven't figured that out yet, but it's like a natural way of having a tariff. Our companies will not want to buy things overseas. They're not going to want to pay workers double the amount for overseas. It will bring a lot of stuff back to the United States. So it's kind of an interesting fundamental side that people don't talk about. On a technical side, again, as we approach levels up at this top, we've seen sellers step in before. So in particular, I'll move this over since we pulled away quite a bit from it. Up in this range, I think the 71 area, I think is a wonderful area. We've seen a very nice push off. We've seen it retested. It got front run, but we have 4-hour levels that are approaching up top in this area, right? Let me click the overlay real quick. Oops. And again, we have two. 71.71, and then another one up here at 72.47. So both of these pushes, I kind of like them. Again, I think core durable goods may give this a little bit of a pop. It would be nice if these two came in weak and did pop us into that range. having this kind of straight up with some bad news here would be interesting because that's where we tend to get the turnarounds. All right. If it grinds into there really, really slow, it's not going to be as great. But if we pop up in one candle, there's a parabolic retracement trade this morning in there. So for me, 71.71 is an area that I want to look at. I'm going to look for a bounce, a pullback, and then kind of a retest of that to push back to the downside. If we are able to spike through, and it's a lot, it's about 100 pips higher. I don't think core durable goods is going to be able to drive us that high. But if we are able to get up to here sometime during today, again, I think that is another great sell target to the downside. And again, you're basically playing the retrace of all this, crazy dollar weakness. Because I'll tell you right now, Australia's market, their economy did not get any better over the weekend. So this is basically purely a gold speculation play that is bringing the Aussie strength and then the dollar weakness coming back in again. Okay. All right. Aussie yen. So Aussie yen looks a little bit different. Wait, it's still the Aussie. Wait, what the heck is happening? Wait. Why is this up here, but this is not? Well, again, it is not. It is not an Aussie-based market. U.S. indices go down, and it gives strength to the yen. I'm actually obviously this push. So where we are on this one, again, on an hourly basis. Oh, you know what? Let me bring this back. All right. You may wonder, what the heck? Why has my chart got so many different colors on it right now? So this was a mentor session we did last week, and I feel it is important to kind of go through this with you guys because the individual I was doing mentoring with, I felt was lost a little bit with it, and again, not using it correctly. Okay, you guys will hear me mention about the curve all the time. Okay, basically what the curve is it's taking more or less highs and lows inside of a larger time frame channel, or even the current channel that you're in. Right, there's a curve inside of this area here on the smaller time frames. But something like the 4 hour, we're talking about what is kind of the best case scenario. And I thought this is a great example, and that's why I've left it up here. Take a look at this chart, guys. Ignore what the chart is. Ignore anything you believe about the Aussie or the yen, and look at this chart and just focus on where the curve is. Okay? Look at price action. Look at the speed, the velocity, the angle of ascent or descent when we are out of the middle range of the curve. Okay, and what I mean by that is this. Look how fast, again, I'll change this to a different color. Let me change this to a different color so we can kind of go through it. We'll pick, let's do a little blue. Okay, look how fast, from here to here, look how fast it was able to come back up again, and then again, come all the way back down again in that same time frame. But if I take that same blue width, right, look at the width of this blue level. Look how little it is moving during this time frame. And I can match it here. You can see it's not moving at the same kind of speed, right? Over here, it got close, but again, it popped out. Over here, it went from top to bottom, and it got close. I mean, it opened here, close here. Here, it did it, but again, we popped below and came back to the other side. Here, we did not again. And again, here, we went from top back down to bottom. Top. Again, you guys see how it fills both sides? It fills both sides from here up. Again, here, coming from one side to the other one. So if this shows you anything, again, bottom, top. The speed and velocity when we were outside of the curve, as you guys can see, again, this is an up. This is a down. This came from the high range back down to the low, back up to the high. And again, meander, slow. We punched high. We punched back low. Okay? So, again, what this does is it gives you kind of the idea of where the bias should be during those specific time periods. Whenever we're in this range here, again, we're looking for a high-level turn, typically higher or lower in the curve. And I just said, this is the upper end of the curve. We should be looking for sells. Should we be looking for sells right here? There are a couple that came through, but ideally, you want them in the top 33% of this area. And that's where you get these gigantic moves. Same thing over here. Whoops. In the top 33%. Down, retest in the top 30, boom, collapse. Boom, collapse. Came down and then punched through. All right, so that's why I kind of had this up here. I'm going to delete all this now just to make it a little bit cleaner for you guys. But, we talked about it, and, in talking to the student, I was like, yeah, you understand what the curve is, but you're not quite using it in kind of the best possible way you could use it for. All right, so as we said, we know that this is the upper range of the 4 hour curve. We are on the bottom side here. So again, we've had these levels down here. Price hit it. We had this zone marked off last week. It is looking like it wants to bounce again. And again, it is also giving us a little bit of strength here, right? A little bit of strength. And when I say strength here, I mean, again, this is that Aussie strength kind of kicking in. But this one has been pushed all the way down. It doesn't quite match. As you can see, this one had a great setup. There's a couple levels that were put in on Friday, right? We had this nice pull up, a boom, collapse. Pull up, base, drop, tested that zone, drop. Ended in that zone, and again, this is what we talked about last week, guys. Ending in those zones typically gives us great setups. What happened? We gap lower, we pulled back up, grabbed that same area that it stopped in, and and then it collapsed all the way back down. So Aussie yen is in a little bit more of a channel sideways. This one is a little bit more grindy, and again, this is predominantly being driven by the yen in this case, not necessarily the Aussie. Because again, you can see the overall trend is down versus this, where the overall trend is more up. So with this one being high, again, it's got some nice levels up top. And this level down here, you got to think, all right, well, this one is kind of pushing, right? And it drove deep. It went into that zone. This one has room to run about 50 pips more to the downside. And again, that would be that strength. So the question is, what happens when we hit these levels of buying and we hit these levels of selling? Where is the Aussie going to move? That's going to depend on a lot of different things. What day of the week it is, what news is based off of that. Again, one thing that I can tell you right now is, and let me see here. We have Aussie news tomorrow night, okay? I don't care what gold is doing. If these numbers come in bad, right, is Aussie going to continue to go strong? The answer is no, okay? Answer is no. So for tomorrow night, it doesn't necessarily matter where, what gold or what the U.S. is doing. If Aussie is bad, it will push down. What will this one do? It will also push down if the Aussie market is bad, because then it becomes an Aussie play, not a dollar play. So hopefully that makes sense. All right. So those are those two. So euro yen, as you can see, the euro yen has some strength coming back up again. So we had a Harry Potter set up late last week. We never ended up getting a pullback. We had literally a spike down, a spike back up again. Remember Harry Potter entries? We needed to go in, base, and then come back up again. It didn't. This one went down, up, and really never gave us the spacing. We need that level coming down because we need those new levels of orders to establish themselves. And it didn't in this case. It just was like boop, boop, straight up and down. It's a spike. So never got the entry short on this one, so we have to remove it off the scanner. We still have levels up here, approximately in the 124.18 level. I do like this one. I like how this is rallying up. Again, if this continues to push higher with that kind of, it's slightly European strength. We ended on this really big candle here, and then we opened kind of over in here, right? It just kind of like flatlined on, like it went up and then just kind of went lower. So, I wouldn't say that there's massive, euro strength. But again, it is rallying right now based off of what we see in the yen. So if we can get a push up a little bit higher in that 124.17, I actually like this one for a reversal this morning around 10. If we can get some, maybe some good news on the durable good orders, we can get a spike up. I think that's it's a legitimate zone. The 4-hour zone on that is only 18 pips, so we could get a nice little turn, flip back to the downside, coming back down here, the origin of the move. I think that's a pretty decent kind of level to the downside. All right. As far as going long for anything, ideally you'd like to come here. It's about 80 pips that we need to retrace. That would be a lot of movement for a Monday, to be moving like this and then come all the way down and then come back up again. So if anything, if this starts to roll over, it gives us one of these. There could be a potential long here. It did turn very, very fast, and it actually, here's the actual level. There's the actual level. Let's change this to white. There's the actual level that it bounced off of, okay, to establish that level, to go higher. So anything, again, I don't think this is a today target by any means. Maybe if the data is extreme, like crazily off, maybe, but I would say that the chances of that are probably slim to none, that core durable goods is going to take this suddenly and spike it down in one candle. But 122.89 would be bottom side for me. 124.17 or 124.18 would be the top side. Looking for some type of reversal to play somewhat more of a channel today, but with this top and bottom. Okay. Now pound yen. Pound yen is not doing much. We had this little trade set up here. Now this one also. Let me click the time so you can see. Here's where we are right now. Here is where we ended Friday. Right here. Okay. And then you can see where we are for the weekend. So what did this do? It literally spiked up into that zone. Now, this was not a kind of a new base zone, right? You could have drawn the zone based off the basing right before it, but this was a prior zone that was violated. It hit, it went up, it kind of drove through, punched down, retested, and gave us that entry. So we knew that there were orders in this area. Here, this green candle that ended there, that's where we ended on Friday, right? We always talk about ending in zones and what the possibilities are for the next week. Well, as you can see here, I'll drop it back down to a 30-minute. You can see right here's where we ended. Okay, here's where we opened. It went up and came back down. Came up, came back down, and continued to push. So this one from a zone that we had drawn last week where we had this initial Harry Potter entry, we have now gotten, at this point, had you held it over the weekend, you were good, right? But I'm not going to count that one. But this one as well came all the way back down. So, Here's a here's a one, the first 1 to 5. Here's another 1 to 3. Here's another 1 to 5. So it's been a great level going sideways. I don't know why that one was there. I would not use the level again, though, guys. I would be very cautious with using it again. If anything, you could potentially use it for the top side, since we know it's been an area of interest. It has held on both ends. Again, you can see there was another touch here, right? A top one, a top one, a top, and then growing through. A top, a top, a top. So this is number 4 going through that same level. So I would be very, very cautious with it to use it for a short. But again, we do have the possibility of going a momentum breakout trade to the top side. The top level of that one is 135.81. But right now we're just consolidating. Right now we're consolidating. You see a low, higher, low, higher, low, higher, low, and we'll see what this one turns as well. So not much movement. This one is down 15 pips in 24 hours. It is pretty consolidated in. Even looking at some of the upper levels, you can see we're kind of, a lot of these tops are coming down and a lot of these bottoms are coming up. But as far as a bigger level in the 4 hour, 134.25 is an area where I'm a lot more comfortable, putting buys in. Sells, I think we have a little bit more opportunity in here, but ideally up in around this 137, I think is the best. That was based off of another level that we had up there. Yeah, you can see it's in the top of that 4 hour zone. It's an hourly level. Now, we did put a level in that's not horrible. Again, if price is able to grind its way up, there is a level sitting really kind of in here. I mean, if I had to draw it, I'd draw it probably off of this area. So, it's been tested once. It was tested right here. So 136 on kind of an intraday level, 136.43 probably wouldn't be bad. Also, if you're going to take your longs back out of this kind of this previously violated zone, this is enough room to get a 1 to 3 and potentially a 1 to 5 in there as well. The 1 to 5 may be a little bit riskier because of this level right here. But I think your 1 to 3, it'll bring you up into this range. I think we're good with that one. I don't have too much of an issue. If, again, we get a pop, a retest, and then punch forward, make sure you're out before 136.43 because I do think we will have some sellers in there. Downside, if we do start breaking, there's not a whole lot here. But again, I would be much more willing to buy, take a long kind of reversal here on 134.25. Now, pound dollar. All right. Pound dollar. I have a lot of stuff drawn on this one. Let's see. Should have been updated. We've moved away, so I'll take this violated zone off. Let's see. Let's take this level off. All right. So let's drop up to 4 hour. As you guys can see, we got a little bit more room up top. All right. So here's where price was. Here was that little trade setup we talked about last week, and we were saying, hey, listen, it's hit here a few times. You guys can see it right here, right? You guys can see this was a level we drew with a top. Oops, it was confirmed. I didn't want to go that low. There we go. And again, front run, touch, 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 pull back, break. Then what did it do? And we said, hey, listen, if we pull back, it could be the same type of continuation pattern. Look what happened right here. Okay? Just like we mentioned on the euro, what happened? It's a zone until it's not. Right? Again, we had our front run, touch, touch, touch. Number 4 broke. We missed the pullback here. We drew the box. What did it do? It came back and retouched right here. Okay, so this was a yesterday trade. We opened, we pulled back into that Harry Potter trade. We broke through, off to the races. Okay, so now it's about finding more of a top than anything else on this one. You're definitely going to have to go to these higher time frames to be able to find it. And like I said, 129.40 is really, and it's a 4 hour level. You guys can see it. It's this 4 hour up here. But I'll just do it on the hourly just to kind of keep it consistent. But you guys can see how close we are actually to that area. And it's not bad. The risk level on is rather small. Again, for a 4 hour level, it's only about 34. What I would do is, again, see how we react off of that one. See if we're able to put a kind of a top in, one of those falling star type candlestick patterns. Look for it to pull away, look for it to base, and then go back up and test it again. But what I would do is I would refine my risk on a 30-minute chart. I would drop it lower, and we got some room right now. That's why I'm just kind of talking through it with you guys. We're about 95 pips away, so it's got a bit of room. It's probably not a today trade. This is probably more of a tomorrow if we continue to have pound strength. But like I said, we're looking for a touch of that level, a pullback, a base, and whether a strong drop or a slight pullback up, but lower your risk based off of that peak candle into that zone. It's a way to cut it down from 34 probably into like the 12 to 16 or 18 range. I think that's going to be the way to play this. Looking for additional longs out of here. At this point, I try to be a little bit careful. We have a level here that is not bad. It came down pretty nice and then popped and then went back up again. So we're in a bit of a level now. I just feel with as much weakness as we had, we are due for a bit of a retracement on this one. So, that's my only kind of caution with this one. And again, it could drop back into this level. I mean, there are clean. I would say there are clean levels in here. And again, this is a retest. It's probably a little bit safer for probably here, right? 127.79. But look for that push back down. I do think it will come back down today. I do think this will flip again. When U.S. traders come online, they're starting to now, but in the next hour after this durable goods orders, I think that's going to have a lot of control over this. So, if we get a spike because of durable goods, 129.40 is a short for me. 127.79 is an area where I'm looking to get long based off of this previously violated zone that came across and then again tested and punched higher in the overnight. Okay. Euro pound. Euro pound right now looks like 43 pips up for the euro. But you can see this has been two gigantic spikes, so there's probably news based with that in the last hour. I'm checking it right now. Yeah, online sales tax could help save the UK high street shops. Not too much. There's a little bit for the UK, but nothing that I would say that's, hey, listen, you got to watch for this one. It's all right. But again, is this a parabolic move? Yeah. It went from the middle of the curve all the way up top. Question is this going to be able to hold? And again, we had this area marked off. It's not a fresh level. It has been touched before. We got about 3 hours to go on this one. If you can get a confirmation, to the downside here, this is way too fast of a move up. It should turn and flip back down again. Make sure you have profit targets on this one on the downside back in this level, right? When we get the confirmation of a flip. Let's see. 1, 2, 3. There's another zone there. So we're going to remove this one right here. We don't need it because we have this hourly zone already placed. Yes, we'll see it right there. Okay. It's a 4-hour zone. Let me see. Oh, it's a crab candle. I forgot. I keep going back to this one every time. I'm like, let me see what's in this zone. And like I said, this zone right here, this right here is not the highest quality, right? It spent a lot of time here. Front run, 1 touch, 2 touches, 3 touches. This is number 4. Okay, so in essence, this is actually not a trade. But we'll leave this zone here. Okay, because again, we have our 1, our 2, our 3, and 4 we expect to fail. Okay, so for this, I would say we're looking for entries here. This 91.65. Okay. Wait for it to get in the upper range. Again, we've marked this one off. It's a 4-hour zone, but I wait for that level. 91.65 for a retrace. Hopefully it does it in the next 30 minutes because I would love to take this back down based off that pop. Pretty much a wash. Yeah, I was looking at it right now. Yeah, I mean, the core was down slightly, but the durables were up. So yeah, more or less a wash. Yeah, it's about the same. I was trying to see. Let me see if they've given us a new thing. Yeah. They haven't updated the news yet. The news release is up, but I haven't seen the actual press release for it. All right. So yeah, it's more or less a wash. Now, the one thing to take from that, just so you guys know, we're talking about this one. So again, if you don't know what durable goods are, again, you can always click on this for, and what it'll show you. Again, core, and looking at core, right, you can kind of see, right there, aircraft. So not always necessarily the best one. Durable tends to be a little bit better in my eyes. Yes, wash, probably a little bit better. And the reason why the durable matters, it's defined as things like automobiles, computers, appliances, airplanes, not so much. But, are people purchasing automobiles? That tends to mean that consumer confidence is high. Are people buying more computers in preparation for virtual homeschooling and everything else? Probably. But again, this is a big tech booster. Appliances, also big tech booster. So again, these things minus the airplane aspect of it, which is more of an industrial. Again, these are NQ. These are NQ based products. Okay. So again, kind of gives a foreshadowing of what, where NQ could, potentially be going. All right. So let's pull that back out. All right, so there's pound. Keep going, keep going. I want this thing to keep going. I'm cheering for this one. Looking for a flip, probably this area right here. Is what I'm looking for. And in this case, the 1 to 3 is in a perfect location. Your 1 to 5 is actually in a great location as well. So keep going. Go euro, go euro. Euro dollar itself. Okay, so again, euro dollar is popping. You can see that it's pulling back now on the 1 hour because again, the news is not necessarily as as dire as everybody was hoping it could be. We do have a level up here now. This is a daily zone. We got a bit to go on it. We got about 170 pips. There's not too much clean on the on the 4 hour on this one because it literally has been it's been forever. Right? Look at this. It's been forever since it's been back here. So the last time the price was here, was in 2018. Right? 9/25, 2018. Now, it is a daily zone. Okay. It does have a rocket, straight up ascent. Again, you got to be thinking that could we potentially be getting a reversal from here? Yeah, it could be. There is a potential spot here. This thing could come back in. Question is, how much of this is truly a dollar weakness move versus a pure speculation for what stimulus will be? Now, if all this movement is based off of the stimulus package we are going to get this week, when the stimulus package comes out, it's already factored in. They're already assuming that that's what's going to be. What that does, if all this movement is for that, all this could be is basically for a disappointment, right? And if we have a disappointment, it will turn and kind of bounce back down at the same level. So, just kind of something to keep, food for thought on that one. Again, we are approaching, a daily zone. Watch it. We do have a base right below it. But any type of a confirmation signal, again, we have a couple of these Harry Potters to the downside that would be looking for, any type of a retracement. But again, I don't really, not a huge fan of this one. If this is our top, then yeah, I may be looking for some type of a short in this one, on a smaller level. All right, but we still have. I'll remove this now because we're a bit farther away. This is, I think, a 30-minute. Yeah, it's from that 30-minute level down here. Actually, you know what? I'm going to remove it now because that one overlaps. So we're good. I'll leave this here. Actually, move this to here. All right. So there we've got euro. Again, I'd like to see a top put into this one. A top, base, pop up, retest, and drop. So there is a short in here somewhere, most likely today. But there's no sign of it yet. Not too much we can do about it. Now, dollar CAD, again, we've had this area down here at 133.65. It's bouncing back and forth off of it again. It came in and hit last week. This one is down 26 pips in the last 24 hours. And again, it dropped, it bounced and came back up again. So we're sandwiched. I still think, and I do like the 134.23 area. If we're able to rally back up there, we've had enough movement. It's been pretty nice movement, and it's been pretty rock solid up there based off of this upper level. Actually, it should be here. 134.35. I think that's a good area for today. I think we have, what day do we have CAD news this week? CAD news is not till Friday, so this one will kind of be at the mercy of everybody else. And again, with everything going on with the dollar, I do think this one will continue to push down, and I do think we will break some of these levels this week. But they are stacked up. You can see there's one here, one here, one here, one here. So there's a lot of levels stacked up to chunk through. But I'm looking for this, I would like it to pull back, grab some more, and then push back down. So 134.35 is really kind of where my radar is set on this one. Probably not taking it long, but I'm looking for any type of a pop-up into that range to take this one back short again. Now, dollar yen is going to obviously be continuing to fall. That's not a surprise. There was this Harry Potter trade last week. We talked about another level here on a pullback, and it did. It came back up, and it pulled back in and grabbed that level, right? That 130, the 105 number. There's a couple small levels in this one, and again, let's move that out of the way. I forgot this is the overlap. We'll remove this level. Let's see. I'm going to start taking some of these off to clean this up. Let's see. We'll leave that. That one didn't trigger for us. It went low too fast. Pull this across here. I like the way that one looks. Let's see, 4 hour wise. Probably mark this one off here. I guess I can do it higher. Let me see how much risk is this. 26. All right, I'm fine with that. All right, so let's put this down here. 103.34 would be a buy area for me. Like I said, that's the bottom side of that zone, but this was kind of a retest anyway. So, we'll keep it there. So we got some room to run on this one. If anything, I would say this one is also probably due to kind of push down lower. And there's a few levels. I mean, obviously this 106, I like this one. I like how it popped up, hit a tiny area, dropped base, dropped, came back up, retested, and then hammered down in a very nice kind of move. There is obviously a smaller position kind of sitting in here as well. It retested. It's not the cleanest. This could be a potential for a reversal today. Again, this could be one of those 10:30 things if we can get up to that range before 10:30. The durable goods will help it a little bit, and again, wouldn't be bad. And basically, what this is this is the pre-market traders, the news. They see it, it's good. They like the one number. It rallies back up again. It touches. Retail traders are able to react, and then all heck breaks loose again, and we just start dropping lower. So I think 105.57 is an area. If it can be coincided with around the 10:30 reversal, we're good. If it's not, if it's 12 something in the afternoon, I don't know that I would take it as well. I have to see what the action looks like, what the current news looks like. But also keep 106.03 on your radar. I think that is a good level as well. Now the Swiss has pulled back again. I think this one is we mentioned this before. We're sitting down here inside of this level. You guys see we marked off this level of where we expected it to hit, and you can see we literally came right down, just past it off the off the open. So here's the 30-minute. Here's the Sunday open. And you can see what we ran into. Okay, there's a zone put in. Here, where is it? Right here. Okay, right here is the weekend gap, and it did come back up. I actually had cells sitting right here, and I just missed it. And pulled down. It put a base in and retested it, and then popped off again. For this one, it's kind of the same thing. There's some sellers sitting here around 92.38. You guys can see, by the way, that's what the candles here are formed. Bringing it up to an hourly level does hide it a little bit. You can still kind of see it. I would not use this indicator. I would probably use this level here as kind of what my level is for risk. That level coming in, I think, is a little bit better. It's not quite as aggressive as this, but it's 92.53 to the downside. I think, either one, if you wanted to use the indicator, just know that there is a little bit of room above based off of what the wick looked like. This was actually the first touch, but the zone itself is only about 11 if you take the full bit of it, so it's not very big. But that entry starts here at 92.52. The 1 to 3 right now looks like it's in a great situation. The 1 to 5 is a little bit far, so maybe be a little bit cautious about that one, but I think this provided an interesting setup as well. Coming back up, finding a level that was been tested last week, and having this roll over. Okay, NQ. All right, so NQ. All right, so right now we're sitting in a level, and again, this is on an hourly. You guys can see that we had some basing here last week, and a nice push off that level. That's kind of where we're sitting right now. Here was the one from last week. I'll delete that. Get that one off. All right, we talked about being able to break a level and go lower. We actually used that level to turn off of. So here's what's going on with this now. There's not a whole lot really above. As you can see, this was a very fast drop down. This is a very kind of, again, no U.S. market open. It's coming back up again. With it coming online, it's kind of set up right now for a short to be a red day today. Question is, again, we have 45 minutes. Will this one have already absorbed all the durable goods data by that time? Is the big question. It is split, so a lot of people will see one red, one green, and be like, yeah, it doesn't matter. I have a feeling, though, based off the way this looks, if we continue to push down on this one, this was just kind of setting us up on Sunday night to kind of roll and flip and go lower. Basically, having the price go high so we can short it for more. I'm trying to think what would really turn this around today. And I don't even know that I would take this for a reversal today. I think whatever early morning trend is established in this one, I just don't know. Trying to see economic reform, FX Streets, like, 7.3 versus 7.2 as expected. Yeah, I mean, this is set up for an early morning short. Question, and what I'm looking at is I just don't really see an area that I would love to buy it off of in here, right? This is pretty wicky over here. This is pretty ugly. Yeah, I still think if we can break here, there's 110.306. And again, remember, my numbers are approximate. What I would do is I would find the low of this candle. All right. Yeah, see this spike candle? There is both a 1 hour and a 4 hour zone. On the 4 hour, you can see it right here. This candle. All right. Find this red candle, mark the top of the body, the bottom of the wick, and draw 2 lines across. Okay. And like I said, ECN based data, my number is going to be slightly off, but it'll be approximately around 103.06. Okay. What I want you to do is literally take this, mark it off here, and mark it off here on your chart. Okay. Then drop back down to a 30-minute. Okay, now you'll see it coincides pretty well with kind of where we drew it here. But if we have a break below that, again, approximately 103.06, look for a drop below, a sideways base, a pullback, then take it short and look for your targets down here at 101.51. There's a lot of basing here. Again, these are Sunday night data here. So, I mean, I think this is kind of the best look at this one right now. Take a short once it's confirmed. Again, if you want to be aggressive, there is obviously the basing level and nice push off, and that's what we're in right now. We do have a red, green, red confirmation down. So again, that will probably continue to push lower. But if we're looking for the most conservative entry, it's going to be a push below this level. And again, it could be a late night thing today going into tomorrow. Okay. So early morning, aggressive, you want to take it here. Yeah, you're good. That level will probably be fine along that line. But I would kind of stack these on top of each other. If you want to take that one, great. Be out before you mess with this area. Break below this level. Again, it'll be a violated zone. It's kind of been pushed to the brink. Go down, pop up, and take that lower. All right. It'll be interesting to see for Nadex tomorrow afternoon how that one is playing out. S&P. So S&P, we had this level, we never pulled back. A lot of basing in the S&P. We had marked off this area at 3204 last week, and that's kind of where it stabilized. I think we need to watch that level again. I'll move this over here so you guys can see it. But here's where that price is. Here, I'll draw the teal line, and I'll make it a little bit bigger. Actually, let's do this. Horizontal line properties. I'm going to make it much thicker, and I'll make it a color that you can see. Okay. As you guys can see, look, we flirted with it. We touched it. But we've barely been able to break that zone. So because this one is closer, again, this is on the 30-minute, there is a reversal that could potentially be setting up. Again, we've had some issues going higher. We're more or less sideways channeling at this point. Look for a price to come down. If we can get into this 3202, there's one of two things that will happen. One, we will get a bounce, very similar to one of these things. Now, it has kind of just barely touched the top, so we should go into this zone a little bit. If it's just a quick glance, I'd kind of be surprised, right? But if we do get that pop, I'm okay with that risk level in there. I think that one is okay. If it does fail, if it pushes all the way through, then absolutely, without a doubt, also take this one short. And again, that would look like something along those lines. Okay. The far side of that one being approximately 31.86. It is closer. Again, we need basically an hour and a half worth of movement to the downside, which is absolutely possible to get in time for a 10:30 kind of feel good, happy reversal back up into this same level. Okay, so if the S&P is not going to be a big mover today, it will come back down. It will retrace this move. Again, I'm okay with this one short, back down to the origin of this move. But again, I'm looking more for kind of a sideways channeling. Now, if the wheels get knocked off the off the wagon very, very quickly and this thing comes down real fast, then yeah, it looks like we'll go lower. And we'll most likely come back down and be down here at the 31.43 for the day. Okay. That could be our ending price if, again, the zone is unable to hold. So keep that on your radar. Like the short, like the continuation, like the target lower. All right. Now, Dow. Dow is also, and again, this is down onto a 15-minute chart. So there's been a couple different entries on this 15-minute one. Again, this is a level we talked about last week. This is where we ended right here. And then we kind of jumped across, right? The 24th to the 26th. So we went back up to that same level. We just glanced it. Again, depending on your data, you should have hit it. If not, you'll probably hit it pretty soon. It was the same level we marked off last week. We had some retests into the whole thing. And again, it touched here late last night at about 11 o'clock my time. It is also basing. It looks very similar, right? That basing level, and it has to overcome this. I also believe that this one will come back down again. This one doesn't really have a clean buy, though, down to 26,158. Again, that is coinciding with a 1 hour zone. We'll just drop it down to a 1 hour. All right, so this is what we're looking at. We got a bit of basing here. We got a little bit here. I do think it will come through. I don't actually like the Dow for that continuation pattern based off of what we see here with the wicks. Right, we had to push up, and here I'll do it on a 30-minute. Probably easiest to show you here. we had this push up, push down, push up, push down, push up. So again, there's a couple different things in here that make this one a little bit more difficult to kind of grab. So I would be more cautious with the continuation pattern. I do think we will come back down. I do think we will. I don't think we'll have much problems coming down to the 26,379. But we do have like I said, a very poorly drawn hourly zone that starts here at approximately 26,147. I think a better opportunity to get into this one for whether a reversal or maybe just a complete turn of the market would be 26,059. Areas where we can get short. We've hit this level now at least 2 times, potentially, arguably a third time, depending on what time frame you look on. I'd be a bit more cautious with this one, but I still do think this level. Oops, not that. I do think the level higher is still a valid entry. If for some reason we are able to take a turn off this little bit right here, the 26,667 I think is another good area. I mean, prices tried to rally up. It ran into something and bam, went forced back down again, has been unable to get back up to there. So, it's technically a one-touch level. So it's got to be valid. So again, may not be today, maybe not tomorrow. The market's going to have to go up to hit it. But I think, 26,667 is also an area where shorts will be coming in. Okay. All right. Looking at gold. Boom. Look at that. So what did I mention? So in the last hour, again, U.S. traders are starting to come online. This one is also starting to be pushed back down. Now, is this one where we can really grab a top from it? Don't know. I mean, could it go higher? Sure, it could. You're seeing it kind of retrace back down. Anybody that woke up this morning is like, man, gold looks awesome. I'm going long. They're having some problems right now, right? They are not happy campers. Was there an easy entry on this one? No. Does it have a little bit more room to run? Just a little tiny bit. I do think there's a level kicking in here. This is a 30-minute level right around 1929. So if it bases here and starts to pop back up again, definitely not surprised. Not surprised whatsoever. Areas I'm looking for if this area collapses, I do think it will have a little bit of a sticking point right here. And again, this is that 30-minute level, right? We had a nice push up. We had a little bit of a kind of a grind, and then it popped out of that level. Let's adjust it so it's correct here. There to there. Excuse me, right there. So any break of this level, I do feel that this will be the next point for shorts. But like I said, for this level, if we do break below and come back up again, again, the impulse correction move, there is a potential short down to 1920. Below that, there is another one. There's a couple speed bumps. I mean, here's another speed bump on the 15. I don't even know if we can see that on the 30. Yeah, we can see it on the 30 as well. Yeah, you can see it right here. Take it to here. And that's coming in here. So there we go, guys. There's 3 downside profit targets, but like I said, either of those could provide any type of a bounce today. And this is what I mentioned earlier when we first started, right? Sunday happened, and again, it was kind of like the underbridge. Yeah, tons of inflation. Yeah, go. And now we've seen for 2 hours it basically turn around and go back down again. And we've gone, down $20, right? We've gone, I'm sorry, 10. We were up at 1945-ish, and we're down now at 1933. So, it's been a pretty nice move in the last hour to the downside. It will run into some buyers in these levels, and again, retail traders will come and react to this one as well. I want to see it start, establishing some type of a channel. I think that's the best bet. I would expect, because we did not hear any stimulus news. Actually, let me search for it real quick and see if. Let me check that real quick and see if there was anything that I missed this morning. Let's see. Hold on, I'm just doing a quick search for stimulus. Stimulus. All right, so here we go. And reduce unemployment aid and CARES 2.0. This is one of the news things that I found here. $1,200 stimulus check. Obviously, the eviction thing again, and reduced unemployment aid. So I don't know. And this is, let's see. Remember, Democrats. Okay. So yeah, so this is nothing crazy. I'm trying to look for different. Trying to see if there's anything recent. It doesn't look like there is. Coronavirus protest stimulus. This is what I was looking for. Yeah, it looks like right now. Yeah, and again, however, as it stands, the Republican proposal wouldn't renew those unemployment benefits outright. Instead, there would be another round of $1,200 stimulus checks and extension of the moratorium. Um, Democrats have said they favor extending the unemployment enhancements for the economy is still weak, but Republicans say that will deter people going back to work. Okay. So that's kind of where we're at. It's $1,200 or an extension. I guess it depends on who really wants to push it through or not. Only problem with this about deterring people from going back to work is all the stay-at-home things. Again, when your kid is stuck at home, virtual schooling, a lot of people can't go back to work. So I think that's where it's going to be this week. So we know what it stands. I feel like the $1,200 stimulus check is not going to do a whole lot. Like I feel like I don't know. I feel like last time when people got like what 2,000 or whatever it was, I don't feel like that was the enough payment for us to stay home. I also don't feel that $1,200 is going to be enough to say, hey, listen, gold's going to 5,000. I just don't think that's going to be enough. It's not $1,200 is it's not that's not going to burn up enough. So they'll have to do something better than that. So it'll be interesting to see. We'll probably hear today or tomorrow what the next kind of round is going to look like. Who's grandstanding the most on that one. But again, gold, I think will have some issues, in either of these. Silver is actually continuing to push higher. Now, one thing that I'm looking for right here in silver, which I think is pretty interesting, looking at this chart, this is an hourly. Big push right here, down at the 23 level. We have pushed higher. It is grabbing some order. So, for you guys if anybody out there that is bullish, right, this is an area where, again, there is a potential where it's pulling back. There was basing here before that it could pop higher, but we didn't really hear much. We already know what gold is doing. Is silver a better asset? No, right? There is a short in here that will bring us a 1 to 3 back before it gets down to 23. So again, am I turning into a silver bear? The answer is no. But are there going to be bearish opportunities? The answer is yes. With what we've seen in gold now, again, this one is also starting to kind of falter a little bit, right? Kind of pushing back. And again, it spent a lot of time in this area. It had a very difficult time, but it was a lower low than where the original base was. And this is a big pop. This is a big pop, right? This is 2 candles straight up, that were formed at 5:30 in the morning. So, could this retrace back from this parabolic move? The answer is absolutely yes. Where would it do it? Inside of this range, right? And again, we could actually shrink it a little bit if we wanted to inside of there, right? Lower the risk a little bit. And again, there's your basing level. So treat it just like you would a Harry Potter trade. Wait for it to break through the bottom. Do one of these things, right? Wait for a break there, a pullback. A pullback up, and then go for the drop down. Okay, look for one of those. And again, if it hits here and goes higher, oh well, no harm, no foul. I didn't get into the trade, guys. All we're looking for is a drop, a base below, draw a triangle, have it pop up, touch, and go back down again. And that would bring us down to approximately 23.36. Okay. Like I said, if any shorts that you guys are in, make sure you're definitely out by 23. I would even say like 23.03. Make sure you're a little bit ahead of this zone. Actually, 23.05 is probably where you definitely want to be out. Again, nice pop, nice base, huge imbalance up. Okay. They said they released the bill in sections. Do what they agree on at the end of the month and negotiate later on the benefits. With kids as peanuts. Yeah. Yeah, sneaky. Like I said, it seems like one side wants the check, the other side wants the unemployment benefits. So it's kind of like it's going to be one or the other. It's not going to be here's a check and let's discuss the rest of it. Because remember, the unemployment benefits run out at the end of this week. That extra $600. $1,200. If we're going to be if the U.S. is shutting down again, $1,200 is not going to last very long, and they're going to have to do another one. I think a more sustainable solution. Because here's the thing, okay. If you are still working 100% of your normal time, working remotely, do you need the $1,200? No, you don't, because you're still working and your salary is full. So I don't feel that is what's going to help people right now. I think, and this is just my opinion on it, I believe that the unemployment side is probably going to be the side that makes the most sense. Okay. Because I mean, again, if you're still working remotely and you're working your full salary, you don't need $1,200. That it's not going to help the people that need it the most. So I do believe that the single check situation is going to be the less viable solution going forward. Okay, if you are a restaurant worker and that's your whole salary, and your restaurant has been shut down, a $1,200 check is going to disappear very quick, and then there's nothing. So I think the $1,200 will be something that, yeah, we're going to have to do more in 2 weeks, but it's going to mess up a lot of unemployment benefits and it'll cause a lot of problems versus just having it continue. I think that's what's going to, unfortunately, I think that's the route we're going to have to go, especially with all this virtualization. All right, so let's go across to our favorite commodity in the world, oil. So last week, what did we talk about? Oil has a love affair with this 41 zone. Look at this, man. Look at this. I didn't want to touch that one. Oh well. Look at this. Again, we hit it multiple times. We based off of it. We use it as a bottom. We came back down. We sucked back into it again. We went low. We went high. We sucked in. Low, high. And again, it's just riding along this 41. So we did burst out again. It does look like it's trying to put lower moves in again into that 41 level. 41, well, what is it, like 4105? Yeah, 4105 to 4125 has literally just been a magnet for this price. I wouldn't say that this thing is going up or down right now. I mean, this is literally a sideways market. This is a 30-minute. I mean, I can bring it back to an hourly if you guys want. There's the hourly, right? It is still very much kind of sideways. Now, we do have a nice level up top, that one up here at 42.21, about $1 from where we are right now. I do think that's an area that we have to watch out for. Now, will we have a spike today? I don't know. It's Monday. Maybe, maybe not. You never know. Typically, the catalyst that we would have today that would drive it that high would be some type of, geopolitical thing, right? But we watched price grind up into that level and then again got hammered down in 3 candles. So you got to keep that one on your radar. All right. So let's put we'll just do a ray from there. Okay. Let's make this ray bigger. We'll go here. And we're going to turn this thing bright red. Okay. So 42.20 is an area that we got to watch out for. Downside, there's not as easy of a level to find, right? I mean, we had a small level here, right? Came down, base, popped, retested, touched it again, but it's pretty deep in that zone, right? Being really deep in that zone, I would be a bit cautious on that one. And again, that's 39.30. It's kind of one of those things. I just, it could. I think it could be a little bit risky. 38.80 is probably a better buy area. I mean, it came down at base and then has not even remotely gotten close back again. Big question is, can we tear through this bottom side down here at the 40 level? So I don't know. Like I said, there was the short from last week. I don't really love the way that this formed right here. It's not my favorite of levels. There's small levels in here, but I don't really think any of them are great. I mean, this basing in here has held pretty well, but again, 1 touch, 2 touch, 3 touches. The next one through is number 4. So I think if anything, there's a minor level here at 50.40. I'm sorry, 40.52. There's a minor level, but I don't know. The inventory report last week was huge. Question is, we're going to have another big one this week, and we'll find that data out tomorrow night. So for Monday, even on these lower time frames, I would drop really low. I mean, I would continue to drop this in even lower. You can see it's really powering down right now. And it didn't even really go off a clean level. I mean, I really wouldn't use that one. It's a broken of this one. So, yeah. I mean, short side, I think we're going to come back into this level right here. I think we'll push back down into here. Actually, probably this level. Okay. Oops, not there. Mark it there. Okay. Yeah. So if we can get a reversal off this one, 4107, there could be a nice little bounce off that too. We may get something off of that one. Again, 10:30. Look for that one to flip. Okay, that's about the only thing that's clean, and even that is not necessarily clean. The level is truly, again, this is an aggressive entry. The level is really here, and again, we've hit it and hit it again, right there. Okay, but again, that's a reestablishment of the level based off of this candle. All right, but anywhere down in that 40-90ish range, I'd be looking to go long, especially if it's around 10 o'clock. Okay. All right, guys, so that's the last one today. My voice did make it all the way through. I'm quite happy that it did. Yep, Rue and I do this every morning, 8 to 9 a.m., Monday through Friday, and we'll go through and kind of break down everything for the day. All right, guys, so let's go ahead and do the drawing. I have 7 of you guys in right now. Do exclamation point ticket. This gets you guys some pip chips if you guys are the winner. Things that I would watch out for the rest of today as we're doing that. I'll give you like another minute and a half. Obviously, there's no other news today. On Forex Factory, this section over here is going to be the big thing. Okay, it will be because there's nothing, and we mentioned this in the very beginning, right? We talked about low impact news releases. There's not a lot of them, right? We got nothing. We got nothing until 7:50 tonight, which means the news is going to take over. Okay, the CNBCs, the MSNBCs, whatever their kind of spin on the day today is going to be is what it is. If we hear stimulus news, that will also make a difference. But I'll tell you right now, I don't think either side is necessarily happy with the stimulus that is right now purported coming out. If they come out with some like other crap, oh, this is what the stimulus is, this will be great, and people don't like it, markets will tank. Okay, markets will definitely tank based off of that. So put it this way, it's Monday. They got a couple more days to go. I really don't think that we're going to hear the true stimulus idea today. I don't think they're going to come. Stimulus will not be approved today. If it did, I would be absolutely shocked. But that's going to be what's going to weigh on the market. So watch out for the news, guys. Again, use it as a catalyst, not for what you should do in the market. Like if they say, oh, it's bad, don't start shorting the market. Okay, that's the worst you can do. Use it as a catalyst and check your zones. Okay. All right, so we got 11 people in. I'm going to go ahead and close it down in 10 more seconds. So that way it's right at 106. Oh, my voice is going to be heard. I'm not going to be able to talk today. All right, there we go. All right, guys. So Debbie won yesterday. So if Debbie wins, Debbie will get her 100 pip chips instead of her 25. And we'll see. We got some new people in today. We'll see. YOLO. I love that name. Just every day I'm going to talk about this. I love this name. My favorite Twitch name ever. YOLO. It's just great. All right. So today's winner of the drawing is a new guy. Look at that. Last guy in. Let's see. What is that? Is it Weber's TV, I guess? Weber's TV, if I'm saying that right. Congratulations, Weber's. I think it's your first day in, so I will go ahead and give you your pip chips for that one. So Weber's, just so you know, it's so rigged. Weber's, just so you know what you won. Weber's, okay. Basically, what you do is you get pip chips. Pip chips are the channel currency. You can turn that currency in and buy things like indicators I use in my charts. You can also do one-on-one mentoring. And one-on-one mentoring is basically us having a one-on-one Zoom session. We can discuss chart breakdowns, strategies, market psychology, trade planning, asset classes you trade. I can look over the strategy that you're trading and kind of give you where I see it being good and like the pros and cons of it. We can do whatever you want. The way you guys accumulate pip chips, just so you guys know, is just by watching the channel. I don't think it works for replays, but as long as you guys log in and you're on the channel, you guys accumulate pip chips. So again, it's just a way for me to give back, and I typically are doing, I don't know, I think I've done like 3 or 4 mentor sessions in the last week and a half, just off of people watching the channel and getting pip chips out of it. So let's see, real quick, SPY may drop today if it breaks that one. Yeah, I'll go back to it real quick for you, just to make sure we do it. Yeah, if we go down and we break below, like I said, if we break below really here, 3187-ish is where I would see it. Because like I said, it's been right now that zone has been supported, right? Front run, touched. So that zone has been good, and that zone is about right here. Yeah, right around 32. Again, my number's going to be slightly off, so just slightly below it, maybe 3198-ish area. But yes, right around, the 3200 level. It's been quite strong. It's a double zero. It's always going to be a big level, but there are only so many buyers. So, I see it being short from here back down again today, right? I'd be surprised if it rallied, but I see it. I see it retracing this Sunday night move. If we get a break below, make sure you take your profit target before 3200, because again, 3200 is a number they've stepped in. If we can go a little bit lower, whoops, not there. I didn't want to grab that one. This one. Again, if we break below the bottom side of this, which was drawn off of this candle right here. So go to your hourly, find the gap candle from 714 and mark that zone off, and that will give you your risk on both sides. You can refine it a little bit if you want. You could refine it back and pull it up a bit, but I wouldn't go too crazy with it. Even on the 30-minute, I'd probably still mark the whole thing off. I'd mark both those. Okay. Easiest, just do it on the hourly. Go back, mark that level. That's where your risk is. Again, you're looking to shoot back into this range. All right. So hopefully that answers it for you. We will take, yep, sure. Absolutely. Trade to trade. FCCN. Hold on, let me sec. Let me pull that back up. Let's see. FCCN. Spectral Capital. Is that who you're looking at? Small compensation for a rig game. Yeah. Trade. Is that what you're looking at? Spectral? It's definitely a very, very small penny stock. Very, very tiny. Yeah, I'm not gonna be able to get you. I can tell you right now, I'm not gonna be able to get you good data on it. Here's why. It's just so small. Oh, French Connection? Okay. Hold on, let me pull that one. Good. French Connection is probably a better one. FCCN. Did I do that right? Let's see. All right, a little bit better. $7 stock. All right, let's pull the sucker across. All right. Now, typically $7 stocks are, again, they're not the worst, but they're getting into no range. Okay. When you get back into the penny stock range, again, I'm talking about this from kind of a not inside the market, but kind of from more the professional standpoint. As an advisor, once you approach that penny stock level, it's typically a no. We want nothing to do with it. We get out. It just doesn't have enough volatility, not enough volatility, but doesn't have enough volume. It can be manipulated very, very easily. So this one, the analysis is going to be a little bit difficult because, if we go back to here, we got nothing. Look at this. There's just not enough. Now, this, obviously, there was some news that spiked this thing higher. Okay. Obviously, there was news because, again, look at all this volume compared to what we have. So it's kind of one of those things. As the volume now has gone away, it is coming back. So this is one of those classic kind of like pump and like dump strategies. I can analyze it. I mean, again, I'm on a 15-minute chart now. I can bring it to. I gotta find even a. It's gonna be a little bit hard. Let me see if I can get anything good. It's gonna be hard. Because again, there's no volume in most of these things, even on a 5-minute. So, honestly, I don't really see many buyers in this back until the 5 range again. Again, we can see 5 hit here. We can see that 5 has been popular back here again. So it looks, and again, it based around here around 450. So, the best I can do with it, again, there are no candles really to analyze. There's no way to do price action here. It does look like 5 is an area that you need to kind of watch out for. So, if you are long this position, I would just get out, cut your losses for whatever it is. The best that I can do with this one is saying, hey, listen, we've seen an area here. It's stabilized. It's been there in the past. It, kind of gapped higher. We're in an area right now where I think it's in a precarious situation, but I just don't see anything in this one that tells me it's going to stop before 5. No reason to lose $2 additional on this one. Again, taking it back in a penny stock range, the volume is completely running out. So, yeah, there's just not enough here. Yeah, there's just not enough here in this one. I got in at an 11p buy. Yeah, I wouldn't be buying this one. If I was sure, I would just get out. Save if you're long this one, I would be like, if you're in a put, you're good, right? If you bought a put, I would continue to hold your put. I think you are still good to go in this one. At 5, maybe cash it out. I don't know how much time you have left in it, right? I don't know how much time you got left in it, but for a put, you're fine. But I don't see anything slowing this down until at least $5. All right. I think you're good there. With all this volume disappearing, this is going to flatline. It'll just baseline. So yeah, you're good. Good job. That's always nice. Again, great place to get into that one. Again, basing level, pulled back, grabbed it, and went lower. So yeah, good grab. All right, guys. So with that said, if nobody has anything else, I will go ahead and roll. Weeb's like, yes, it's Weeb. Weeb, I'm sorry. I'll get it right the next time. All right, guys. So I'm going to go ahead and bounce. If you guys need anything else, go ahead and join the Discord channel. It's absolutely free. You guys are more than welcome to bounce things off of it. I got some really talented traders in there that will definitely give you their analysis and check it out. With that being said, tomorrow I will be back on. Now, tomorrow, guys, I will not be on from 8 to 9 in the morning. Tomorrow I'll be on from 12 noon to 1. And remember, tomorrow on Tuesdays, it is sponsored by Nadex. So I won't be in chat as much, okay? I'll do my best to answer it. Typically, what I will do is I will go from 12 to 1 for the Nadex presentation, and then what I will do is I will jump over back to just this stream once the Nadex is logged off, and I will answer any questions you guys have. If there's any additional charts you guys want me to analyze tomorrow afterwards, I'll do it at 1 o'clock, all right? So you guys take care. Have a good trading day, hopefully good Monday, and we'll see what the news provides us, and, get some green. I'll catch you guys tomorrow.